Tough to find much good news this week, with a recent brief recovery in stock markets running out of steam, as growth concerns seem to have spread from emerging economies to developed countries as well. And the USA, now in the difficult position of having just kicked off the tightening cycle and with signs of rising inflation in the US, but core economic data actually suggesting their recovery has begun to peter out. US figures released over the last few days show new home sales fell in January, consumer confidence fell much further than expected, and the services index fell. And so the Federal Reserve seemed to be preparing the market for more patience around the tightening cycle. The US stock market is therefore on the back foot, currently showing a strong correlation to the oil price and dragged down by the manufacturing sector in the doldrums. And now there are concerns that the services sector may not be immune to this slowdown, dragging corporate earnings lower. Back home, our stock market has also been under pressure. However, consumer and business confidence is yet to be deterred by these falls in equity values, which is pleasing, although a little surprising, given the strong link over the years between the stock market and business confidence. Perhaps it's been offset by the falling petrol prices, below $1 a litre in many states, adding to disposable income and in turn retail sales, as well as housing values remaining elevated. Other Australian economic data under scrutiny includes capital expenditure, with private new capex showing a rise on the non-mining side as hoped, but the concerns are around projections based on future spending plans, both mining and non-mining companies. So while we don't see any RBA rate cuts in the next few months, the outlook for the new financial year is less clear due to the volatility in markets overseas, the complicated equation in the US, and the slight deterioration in our unemployment rate to 6%. Although SEEK job ads still point to reasonable labour demand from businesses, especially in the eastern states. Suffice to say, the global outlook is very cloudy, but in Australia the sun is still peeking through, as it has time and time again during the range of crises thrown at us over the last few decades. And as those challenges develop, we'll see how the Aussie dollar trades to potentially offset falling demand. The Reserve Bank has a lower Aussie on its wish list, but only need a sizable fall if offshore conditions are really as dire as some forecasters are predicting. And that's the market update from Bendigo Bank.